Yeah, I can see that. Oops.
Hi everyone, I hope I am audible and visible to all of you.
Yes, you are.
Yeah, Shinam, you can always just type that in. So those of you who are watching us live, please feel free to post your questions as comments below the video. And later, if you're watching the recorded version, same way, you could just post your comments and I'll try to answer them. And Shinam, if you find some interesting questions, please keep putting them here so that I can answer them in real time. So as we all have obviously heard, yeah, Shinam, you're going to need to mute.
I am on mute only, actually.
I can hear you. Shinam, I think, can you just exit immediately? Yep. So sorry for that. There seemed to be some confusion in the live streaming. Yeah, so sorry. We'll start now. So that was my fault. Shinam, I hope I'm audible and visible. Can you just answer in the chat with a yes? So as we've all heard and read about today, that in the budget, a lot of issues about cryptocurrencies have been sorted. So let's try to one by one understand what really is happening. Now, one of the most important things that has happened is the term virtual digital asset has been defined by the law. And the interesting thing is that it is defined in such a broad manner that all manners of cryptocurrencies and digital assets have been included into that. So let's just quickly have a look at this. So this amendment has been made to the Income Tax Act. So that's a very interesting approach that the government has taken, where instead of coming out with a separate law, as a lot of people were expecting, there would be a separate law for digital currencies. Instead of that, what they've done is they have made changes to the existing Income Tax Act, defined terms like virtual digital asset and non-fungible tokens. And then for the RBI-led central bank digital currency, which we'll talk about, for that, they've made an amendment to the Reserve Bank of India Act. So let's first start with the most important term that has been defined, virtual digital asset. So it's defined as any information or code or number or token. So that's again a very wide thing, because in the world of crypto, we usually talk about coins and we talk about tokens. So they've defined it in such a way, whether it's information, code, number or token, which is not the Indian currency or any foreign currency, which immediately means an RBI-led CBDC will not come under the definition of virtual digital asset. Now, another issue which would arise is, what about the meaning of this term foreign currency? Now, obviously, US dollar is a foreign currency. So does it mean that a US dollar backed stablecoin will not come under the definition of virtual digital asset? In my opinion, that's what they mean. So if it is directly a fiat backed stablecoin, it may not come under this definition of virtual digital asset. And secondly, what about things like Bitcoin? So now Bitcoin is legally recognized as legal tender in one country of the world, which is El Salvador. Now, the moment that has happened, that one country has recognized it, logically Bitcoin is now foreign currency, which means Bitcoin would not come under the definition of a virtual digital asset. But that's something we still need more clarification on. Malcolm's asked a question about 30% tax. I'm coming to it. Just give me a few minutes. Let me first just explain what's been defined, because the tax is also going to apply to virtual digital assets. So first let's understand what that is, then let's get to the law part. Now, generated through cryptographic means or otherwise, and I think that's the most critical part of the definition, that you are generating this token or information or code through cryptography, which is basically what blockchains are. They're cryptographic networks, by whatever name called. So whether you call it a utility coin, you call it a cryptocurrency, it doesn't matter, as long as it comes under this definition. Then providing a digital representation of value with or without consideration, which means whether you give it free or somebody pays for it, as long as it is either providing this digital representation or there is a promise or representation of inherent value, or functions as a store of value or a unit of account, including its use in any financial transaction or investment, not limited to investment schemes, and can be transferred, stored, or traded electronically. So that's the most critical part. Now that we've seen this, according to me, other than Bitcoin, because it may be considered foreign currency, other than fiat-backed stablecoins, every other kind of crypto would come under the definition of a virtual digital asset. Somebody's asked, is there any way of skipping the text? Which text? I'm not sure what you mean by that. So now that we have understood this part, I'm going to stop sharing for the time being. And hopefully now I'm going to be visible to all of you. So now let's try to understand what are the different issues that are probably going to arise. So the first question that everybody wants to know is, what is going to be the taxation part of it? So here they're talking about 30% being the tax on transactions involving cryptos. Now, this is not obviously on the amount, it is amount the profit that you make. So suppose while doing a crypto transaction, I make a 1 lakh rupee profit, I'm expected to pay 30,000 on it. So it becomes a 30% flat tax. Now, honestly speaking, I think that's a good slab. I mean, I was expecting much more. I was expecting it may actually be maybe 40 to 45%, but I'm happy to say that it's a lower amount than most of us were actually expecting. So that was the first part. I hope that answers your question. Will banks now have to allow UPI payments to central exchanges which they had stopped? Very good question. But yes, now there is absolutely no restriction. So earlier, if you realize what had happened a few years ago when we talk about the crypto ban, crypto had never been banned in India. What had happened was the Reserve Bank of India had told the banks that you are not allowed to give banking services to crypto exchanges. That's it. The RBI did not tell the common citizen that they cannot deal in crypto, because the RBI doesn't govern us. The RBI is a regulator, not for individuals, but for banks and NBFCs. So RBI told those banks not to provide service. Those exchanges then went to the Supreme Court. And finally, the Supreme Court said, no, that particular notification is cancelled. And the banks can provide the service if they want to. But ultimately, it is up to the bank. If the banks feel that providing facilities to crypto exchanges puts them in some kind of legal risk, maybe because of anti-money laundering, some kind of scams, frauds, terrorism financing, the banks can still refuse to give this service. It is not mandatory. It is not binding on the banks to provide this service. It is totally their call. Hope that answers your question, Kishore. Yagnadeep has a question. Is there a way of, okay. Yagnadeep is by using decentralized exchanges. So if today, for example, you as an individual are using a decentralized exchange, or you're doing a peer-to-peer transaction and you make a profit and you don't disclose this to the government, well, you are still committing a crime. In the future, if you are ever caught and then the government realizes how much of tax you have evaded, they could then put that fine on you. So not only do you have to pay that tax, you have to also pay extra interest, fines, all that can be levied on you. So that's the normal, same regular law. Even today in India or all over the world, a lot of people don't pay taxes. So that's called tax evasion, which becomes a crime. And if you are ever caught, you are going to have to pay more. So that's the same thing. If today you use DEXs, well, you could bypass it, but then remember, if you are ever caught, you get into trouble. So what you have to realize is illegal activities will always continue to be done. But now under the Indian law, there is a very clear rule and you have to pay the tax. If you don't, you're committing a crime. Hope that answers your question. The tax, yeah, okay. Then the next question is from Raghav about, does this mean on-chain activity would now increase if people are disincentivized to cash crypto? Yeah, that's a good question. So see, what happens is, now suppose you bought Bitcoin today and the price has gone up. So let's say you bought at 100 rupees and now it is 150. As long as you are not selling the Bitcoin, you're not booking a profit. It's just like, you know, when you buy a house, the house may cost 10 lakh rupees. Over a period of time, the value goes to 1 crore. But till the day that you don't sell the house, you don't have to pay any tax. When you sell the house, that's when the profit is booked. And then you would be liable to pay taxes. Same situation here. Let me give you a disclaimer. This is not financial or legal advice. I'm simply giving you from an educational point of view. You still would need to talk to your tax or legal advisor. But logically, as long as you do not encash that profit, which means you don't sell the Bitcoin, you don't sell your crypto, on paper, you've not made a profit because Bitcoin could again fall down. The tax will be liable when you actually make that sale. Now, one question which may arise is that, let's say, I bought Bitcoin at 100, sold at 200, and then I used that 200 to buy Ethereum. Well, you have still booked the profit. So you would be liable to pay the tax. In my personal opinion, as long as you don't sell, you don't pay the tax. So yes, would that mean more people would now hold on to their crypto? I think yes. I would say the biggest problem would be faced by the day traders. You know, people who are constantly buying and selling crypto because they don't want to hold it for the long run. They're trying to make profits during the day. Those are the people who probably would be impacted more by this. But if you're a long-term holder, it doesn't make any difference to you. Malcolm's question is, so if we sell our NFT, we will have to pay gas fee plus 30% tax. Well, yes, you're right. You will have to pay the tax also. Now, there's one very interesting point that I wanted to tell you. The word NFT has not been defined. So what the government has said is that a non-fungible token will include things which they are going to define under a gazette notification. So as of today, what I could see is that other forms of cryptos are coming under 30%. NFTs, as of right now, I don't think are coming because the government has said they are going to define what is covered under NFTs. So again, that's a matter of interpretation. So maybe over the next few days, we will get clarity on this issue. Till then, Malcolm, it's both ways. We don't know for sure whether you would be liable to pay the tax on the NFT profits. Sumit has a question. In the current scenario, if one wants to avoid these taxes, 30% plus 1% TDS, can we use P2P or OTC trading and skip the crypto exchange? Now, let me first tell you, the 1% TDS is not extra. TDS is tax deducted at source, which means your total tax may be much more, but the person paying you the money is going to deduct some tax and pay it to the government right now, and that is adjusted against your tax. So it is not 30 plus 1. The 1% is part of that 30. So I hope that clarifies that point for you. Now you've again asked, can we use P2P or OTC? You can, but like I said, you are then committing a crime. So that's the thing you need to bear in mind. Legally, you would be in trouble. if you are not paying the tax. By the way, I'd like to clarify, to the best of my knowledge, this particular section is going to come into force on the 1st of April. So if you look at the budget, I've made a small document which I will share with all of you after this session. So in that we can see that some of the new rules relating to crypto are going to come in force on 1st April this year. That's 2 months from now. Some in July and some in April next year. That's April 2023. So depending upon which law comes into force when, the applicability would be different. Janvi is asked, what about the gift for crypto? Whenever we gift crypto, they too will have to pay tax on it. Yes. So what happens is, when we look at anything today, when you make a gift, right, you are liable to pay tax. Otherwise, it would be very easy for people to say, oh, I'm not paying salary, I'm giving gift, and suddenly nobody pays tax anymore. So anyway, today, gift tax is paid. But when it comes to certain relationships, like a father gifting to a son or a husband to a wife, those don't come under this, because those are special relationships mentioned under the various laws, including the Income Tax Act. And gift tax, yes, is going to be liable on the receiver. So when you gift crypto to someone, they will need to pay the tax on that, because for them it's like a completely new thing that they've gotten, unless they come under those relationships which could be exempt. So that's another thing that we need to bear in mind. Hope that answers your question. Let me take Kishore's question. Centralized crypto exchanges will surely allow trading of e-rupee. So does that follow the banks will have to allow it for sending e-rupee? So like I said, there is no compulsion. You cannot force the banks to give this service. It is totally up to them. See, ultimately, the bank is also doing a business. They are allowed to evaluate the risk in dealing with certain customers. And if they take a decision not to deal with a crypto exchange, they are totally within their rights to do that. So it's a tough question to answer whether crypto exchanges will be able to give you e-rupee. Although now then comes the second issue about what would be the Reserve Bank of India's digital currency and how that would fit into the picture. So we are going to come to that very, very soon. Let me take another question first. Okay. So this is from Keshav. So in DeFi, once we sell and get cash, then only profit is booked, right? So if a person decides to always be on DeFi, how will tax work there? So that's a very good question, Keshav. And see, what we've got to realize is today the finance bill has only just come. It now has to be passed in the parliament. Maybe some changes will be made to it. Once it finally becomes the act, then rules will be created also. So under the Income Tax Act and other laws, rules would also come in which would be more specific. As of today, if I was to look at it, the moment you liquidate is when you would be liable to pay this profit. So when you encash the Bitcoin, but now you may have a question. Suppose I sell Bitcoin and I buy Ethereum directly, I do not convert it into rupees or dollars. So as we know on the crypto exchanges, we have a concept called trading pairs. So whenever you're trading any crypto, so maybe Solana to Bitcoin, Solana to Ethereum, or Solana to INR, Solana to dollar. So these are all different trading pairs. When you make a trade Solana to rupee or Solana to dollar, it's very easy to calculate the profit or loss that you have booked. But when you do this transaction from a Solana to Bitcoin, what is going to happen in that situation? Logically, you would still be liable to pay this tax. So in the real world, when we look at stuff, so let's say there is a phone. Well, we are always buying and selling phones against rupees, right? So it is very easy to calculate that all transactions will happen in only one trading pair, phone to the rupee. But crypto is a slightly unique place where you could be ending up converting crypto into another crypto. But to the best of my knowledge, in my personal opinion, you would still be liable to pay the tax. So when you do that Bitcoin to Ethereum switch, you may still be liable to pay tax. And yes, that is going to create a lot of, well, a lot of your profits may actually end up going into the taxes. That is going to create an issue. Let me go to the next question. The next question is from Sumit. There are so many other incomes related to cryptos other than trading and staking or mining. How will these incomes be taxed? That's a very good point. So let's take an example of an airdrop. So when a new crypto project comes out, they give free cryptos to people so that their project is promoted, people get to know, and then people get free cryptos in return. Or you may have to do a learn and earn where you answer some questions, look at a video, answer questions, do a quiz, then you get free crypto. Or you nowadays even have play to earn games. So the question is, Will you be liable to pay tax on that? And the answer is yes, you would. So when you are trading, definitely. When you are staking and mining, definitely. When you are getting free airdrops or you're getting free learn and earn, on all those things, you are liable to pay this 30% tax. I hope that clarifies issues. Anything that you do in crypto, you would now be liable to pay that tax. Sumit, I hope that answers your question. If it didn't, please feel free to add to your question. Yagnadeep says, why did India impose a tax on crypto? Well, my answer would be why not, right? Ultimately, in all countries of the world, the government needs income tax and other forms of taxes to then pay for utilities, right? We need electricity on the roads, we need hospitals, we need police, we need so many things. How is the government going to pay for it? All that comes from tax. So just like everything else is taxed, why not crypto? In fact, I think it's a good thing because now the government has removed the doubt. Earlier, everyone used to be saying, crypto will get banned, it is illegal. Now the government has clarified. We are recognizing virtual digital assets, and this is the tax that we are going to impose on it. I think it's a great thing. So personally, I'm quite happy with the tax, and 30% honestly is lesser than what I had expected. Saurabh says, is NFT also included in virtual digital asset? That's a very good question. And let me just quickly read out the section. So what the government has done is that when they talk about non-fungible token, the law says a non-fungible token means such digital asset as the central government may, by notification in the official gazette, specify. So from this, the conclusion that I can draw is all other cryptos are now covered under virtual digital asset. NFTs, the government will specifically come out with rules and say what is coming under the definition of NFT. That's as of right now. I await further clarifications from the government on this. Let me take the next question. From Sri, what about the transfer of funds overseas, sending or receiving? Is crypto a viable alternative for regular folks to use crypto instead of Forex? Good question. So today what happens is a lot of people do accept payments in crypto, and most of us would do this using stable coins because we know the value would remain reasonably stable. But when it comes to Bitcoin, because the volatility is very high, imagine you are getting paid for developing software, and when you were made the payment, it was 100 and suddenly it's fallen by 30%. You end up losing big time. So today when I look at global payments, very few of them actually happen in Bitcoin. Most of them are happening in stable coins. And then some people also use other cryptos like Litecoin or Monero. But now we've got to realize that if you are using cryptos for such kind of payments, we've got to now look at the tax implications. So as of today, it would probably be better for you to directly use foreign exchange through the banking system till we are able to get more clarity on this issue. The next question from Arpit is, if the government has defined the virtual asset, still government can promote ICO, STO in India? I don't know whether you meant promote or you meant regulate. So that's a very good point. So when I read out this definition to you, almost everything that we can imagine fits into it. So now a very valid question, Arpit, which you have asked is, what about an equity share? So a startup giving shares in itself, well, that's technically a security. And that is something which the SEBI has regulation over, and the company law also comes into the picture if you're an unlisted company. Now, to the best of mine, in my personal opinion, I think an STO would not come under virtual asset. Logically, an STO should still come under securities and under the conventional securities law. Although the definition of virtual asset is broad enough to include it, I personally think it should not come under that. So maybe the government will come out with a clarification on this, but that's a good question. Let me go to the next one. Akhilesh's question is, for current and past profit, are we liable to pay tax? To the best of my knowledge, this comes into force on the 1st of April 2022, which logically means the taxes would begin after that. So for the next financial year, which is still 2 months to go, again, to the best of my knowledge. So ideally, we are not going to be taxed for what we are going to do before that. Kishore's question is, which blockchain is the Eripee about to use and the gas fee? Very good question. You know what? The Eripee need not even use a blockchain. A lot of you may get surprised. What we've got to remember is what the government has done right now, and let me just quickly read out some part of it to you, is that the change that they have made to the Reserve Bank of India Act is talking about a banknote will now include a banknote issued by the RBI in physical or digital form. So the law is only saying that the RBI will come out whenever it wants to with rupee in the digital form, but it is not saying it has to be done on a blockchain. We are simply guessing that when we use the word central bank digital currency, it will be on a blockchain. Well, here it's simply electronic form. So RBI may decide to come out with this even on a regular technology using a regular database, because the real value of crypto comes when we do it on public blockchains. If we are going to do it on a private blockchain, personally, I believe might as well do it on a non-blockchain based technology. So it's too early to comment on which approach will be taken by the RBI. I'm sure they will evaluate a lot of the existing technologies and then maybe use one of the open source ones, or they may decide to build something on their own. But it's a long way to go. I would say it would at least take a year before these things become clearer to us. And I'm sure once the RBI does it, maybe there won't be gas fee, because if you look at UPI, you don't really pay any transaction fee. So I'm hoping when that happens, the same thing would be, and there would be no transaction. Okay, this Mr. Ninja, interesting name. His question is, who will pay TDS? Will the exchange file and pay 1% on our? Yes. So it is, the liability would be on them, because when we look at TDS, everybody is not liable to pay TDS. So when an individual pays another individual, unless you are registered to pay TDS, that only happens if your revenue goes above a certain amount in the year. So there are lots of rules about who actually registers for a TAN number. Like an individual, we all have PAN, but for TDS, you need a TAN number. So as of right now, I would say yes, logically the exchanges would be paying this. And when we do peer-to-peer, if we are in that limit, then we may need to deduct for each other. Otherwise, logically, it wouldn't come in. But exchanges, definitely, they would be doing this. Let me go to the next question. Ritesh has asked, what would be the implications for HiFi and similar projects, hybrid finance project? That's an excellent question. I'm really happy that now projects like ours and so many others would be able to flourish from India. So what happens today, a lot of the blockchain projects and crypto projects, they move to other countries, and that's where they do business from. Now, I'm not saying HiFi is an Indian project, because I think in today's day and age, calling a project of a particular country doesn't make sense, because blockchains are global. You will have nodes in every country. And our team is also decentralized, and we have people from around the world working as part of this project. But we are still to explore what it would mean. So the point is, would this rule apply to the person doing the transaction if he is an Indian citizen or he's an Indian resident, or the node is situated? I mean, there are lots of questions which are still not clear. I mean, I'm hoping over the next month, the government would answer a lot of these questions, and then all of us would need to figure out what the implications of this tax would be for projects. Hope that answers your question, Ritesh. There are still a lot of questions which the government will answer. Malcolm's question is, government hasn't defined NFT, but it will come under digital virtual asset. So like I said, if I just read that out to you again, what they have said about non-fungible token is, non-fungible token means such digital asset as the central government may, by notification in the official gazette, specify. Then when we look at the section before that, which says virtual digital asset, means under that in B, it includes a non-fungible token or any token of similar nature by whatever name called. So I think here there is a slight complication, and two different sections are there which seem to be contradicting each other. So again, this is something I hope the government will clarify. But as of today, these two sections are actually contradicting each other. So I'm not able to answer your question, whether NFT is coming under virtual assets or not. Anurag's question is, how will this act impact Hindu Succession Act? Well, that's an interesting question. So what has happened is that I will in fact read out the section number to you. Just give me 1 second. Yeah. So if we look at section 56 of the Income Tax Act, it talks about income from other sources, in which the term property is there. And now the new law says the word property includes virtual digital assets, but this will come into effect from 1st of April 2023. So there is still 1 more year to go for that. Logically, your question about Hindu Succession Act is talking about property being transferred from, let's say, the father to the son after the father passes away. So logically, this would now get included in the property, but we still have 1 year before that particular section comes into force. But logically, under Hindu Succession Act, now cryptos could also be considered assets which can be willed, assets which can be transferred from one generation to the next. So that's another very, very interesting development. But like I said, that is still going to happen after 1 year in 2023. Razor's question is, how does it impact the salaried people who are getting salary in crypto? Tough question. So logically, you would need to pay 30% flat, and there are no deductions. So now that is going to create a problem. So let's look at it this way. Today, when you get your salary in the bank, right, there are tax slabs that if your total income for the year is below a certain amount, you are zero tax. Above that, slabs begin, and then the slabs go up to, say, 30%, for example. But for crypto, there is no deduction, which means whatever you earn in crypto becomes taxed completely. So you may decide now it won't make sense for you to accept salary in crypto, because you'll probably end up paying a lot more tax than you are paying today. So that may be tough news for some startups. Spriha's question is, any other economy taxing cryptos? Very good question. I'm not aware of any other country which has come out with a specific tax rate, but even before India came out with this tax rate, crypto was taxable, because at the end of the day, you are supposed to pay tax on anything that you earn. The government doesn't have to mention each name. Like, you may be surprised to know, but even if you commit a crime, you are a dacoit and you steal money, you're supposed to pay tax on it, right? The income tax doesn't say don't pay tax if your income is illegal. So even a drug dealer technically has to pay tax. So before this law came, we anyway had to pay tax. It's just that there was no separate tax slab. Now it's a clear thing, 30% is the tax. I'm not aware of any other country in the world which has specifically made a special tax slab for crypto. So we may be the first. Malcolm's question is, if we get crypto as a gift, we should not be charged 30% because it is not income but a gift. Well, Malcolm, there are two ways to look at it. Why isn't it an income for you? You're getting it free. You didn't do anything. So technically the government can say it's an income. Having said that, there are exemptions. So when it is given between blood relatives, say brothers, sisters, father to children, or even between spouses, husband, wife, then usually you don't end up paying any tax on that. So logically that exemption would come for crypto also. Sri says, for a layman, how do we differentiate between rupee and e-rupee? No, there wouldn't make any difference for you. So anyway, like I said, e-rupee is a long way to go. But logically, when that happens, the government will tell us what the distinction is. I would say the only difference would be that normal digital rupee is going to be held in the database of your bank. So today you have an account with bank A and I'm with bank B. When we make a payment to each other, the bank, my bank, has to actually remove that from their database in some way, and then my balance gets reduced, and then your bank will add it somewhere and your balance increases. If it becomes a RBI-led e-rupee, the transaction logically would be instant, and I would have an account on the RBI, say, blockchain, I'm hoping. You would have an account there which could be linked to our Aadhaar, and the moment the transaction is done, which may be through my signature, so my private key, the money would instantly go into your account, and there wouldn't be a need for a bank to come into this picture. So I think that would be the major distinction, but it's a long way to go. We still have quite some time to go. Sri has asked, is the CBDC rupee similar to CBDC Yuan? Tough question to answer because there's not too much known about how China is actually doing the CBDC, and India, it's just starting. As of right now, to the best of my knowledge, the word CBDC hasn't been used in the finance bill. What we are saying there is RBI will now be able to issue rupee, or rather banknotes, in electronic form. That's the only thing that has happened. CBDC as a word has not been introduced. So it's still, we have to see whether this banknote in electronic form is going to happen in a blockchain kind of a technology or a non-blockchain kind of a technology. We don't know that. It's too early for that. It's going to take quite some time. Sri's question, will e-rupee be pegged to rupee? So that's the beauty of it all. If RBI is running it, there is no concept of pegging anymore. Because ultimately you've got to understand who issues rupee in India. Rupee is issued by the Reserve Bank of India. So tomorrow, if the Reserve Bank decides I'm issuing in paper form and I'm also issuing in electronic form, say through a blockchain, it doesn't need to be backed by anything. That is the rupee. So, when we talk stablecoin, is stablecoin actually US dollar? No. Some entity like Tether holds US dollar in its bank account, against it issues stable coins on a blockchain. So we say stablecoin is backed by the dollar. But if the central bank of our country issues e-rupee on a blockchain, it is not a stable coin. It is legal tender. It is the rupee, because RBI is the only person who issues rupees. Hope that clarifies that misconception. Ashwin says, if CBDC is not based on blockchain, then what difference will be there in CBDC and traditional banking? So first of all, like I said, the word CBDC hasn't been defined. Secondly, today the electronic money, which is there in our traditional banking, so in your mobile app, that is not in RBI's app, it is in the bank's database. So if RBI decides to start doing it, no matter whether it is blockchain or not, it is the central bank of our country running the currency, and you and I as ordinary citizens could directly then interact with the central bank without needing the banks. So that's possible. But like I said, it's too early. No more clarifications have yet come and we are waiting for them. Sumit's question, what is your view on scale of implementation of digital currency in the first year? Well, we are the only country in the world which has something like UPI, right? So when it comes to fintech, our country is number one. So I believe that as and when the CBDC or whatever the name is goes live, I think in 1 year's time, we can expect it to really pick up big time. I don't foresee any kind of delays in that, because our country is taken to digitization very, very well. Of course, I'm not saying everybody in the country will use it. There would be still large parts of our country where people would not want to use this because they're not so comfortable with it, and no one's going to force them. Like even today, nobody's forcing you to use e-money. You could still continue to use the currency. Ananya's question is, can crypto be considered as a security? How will it be regulated then? That's a very good question, Ananya. And like I answered a little while before, STOs, where you are making the equity shares of a startup available on a blockchain, logically should come under security and should come under SEBI, and logically should not be covered under the digital asset law as of today. That's my personal opinion on that. Let's see how things pan out. Sumit's question is, Indian citizen give crypto to a foreign individual. How can the tax be recovered from the foreigner? Can this channel be used for hawala? Very good question. See, there are two things. One is whether tax is applicable, and second is how will you pay, or whether you will pay. So even if the tax is applicable and you don't pay, you could get away with it unless the government catches you in future. Now, if you're gifting to a foreigner, good question. I don't have an answer to that. So again, we are going to have to wait for clarifications to come from the government. And whether it can be used for hawala, well, definitely. So it's not like before cryptos came in, there was no hawala. In fact, hawala has been there for centuries. In the past, for illegal transactions and payments, cash has been used, drugs have been used, gold and silver has been used. Well, now even crypto is used. So yes, definitely it can be used. No doubt about that. And in fact, that's how crypto started out, right? With Bitcoin being used by Silk Road. But over a period of time, a lot of good use cases have also come up. Anmok's question is, why government categorized it as an asset? Why not commodity, as some contain utility? Well, that's a good question. Well, I'm sure the government considered all these various aspects. See, usually when we use words like commodity, we're talking about things like gold and silver, rice, wheat, chemicals, those kind of things. I don't think you could put a virtual asset like crypto into something like that, because those are more physical commodities, easier to regulate there. Because crypto is new, the government has put it under a new definition. So they've realized that you cannot put crypto into one of these existing things, which is why they've come out with a new concept called virtual digital asset. And personally, I think that's the right approach. Let me take the next question. So Ritesh's question is that tax on crypto comes in from 1st April. So huge amount of selling would be expected in next 2 months, taking crypto value down. Uh, think about it this way. If you're making profit, then what's the problem in paying 30%? So it's like saying, okay, you know what? I don't want to make 100 rupees profit because I will have to pay 30. Come on, that doesn't make sense. If you feel crypto will keep going up, then why would you sell? You will pay tax as and when you sell because you expect it to go up. So it all depends on you. What do you feel? And secondly, it's not like India is like the majority of crypto transactions of the world. No, we are amongst the bigger countries, yes, but there are so many other countries where this tax hasn't come in. So I don't think selling by some people in India would bring the prices down. Right now, I think we are in the middle of a correction. I'm not calling it a bear market or a bull market or crypto winter. Those terms don't make any sense. In any market in the world, there are always ups and downs. Right now, we are in a bear phase, profit taking phase, correction phase. Over the last few days, a lot of cryptos have bounced back. So I don't think your decision to buy or sell should be based on the tax. It should be based on what you feel is going to happen 3 months down the line, 6 months down the line, or a year down the line. Hope that answers your question, Ritesh. Let me go to the next one. So Razor says, okay, you are a gem, sir. See you at Unchained. Okay, thank you so much for that, Razor. I'll see you there too. Sphera says, doesn't this disincentive mining keep in mind the cost of equipment and network? Well, to be very honest, I don't think too many people in India do mining, because for mining, you need cheap computers, cheap and abundant electricity, and ideally you need to be in a cold place where you don't need to spend more energy to cool down your computers. So I'm not aware of too many people anyway doing mining in India, but definitely mining is disincentivized. But like I said, I don't know if anyone is actually doing mining at a large scale in India. Palash's question is, what if we don't realize the gains for years and keep all of it in USDC? Will it save us from taxes? Logically speaking, yes. Palash, logically it would, but please check with your CA on that. In my mind, in my personal opinion, it would. Rakesh's question, government should modify definition of money to include CBDC, else would it become a virtual digital asset? No. Here the government has been very clear. You remember when I read out the definition to you, it said a virtual digital asset means any information flow, blah, 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 not being Indian currency or foreign currency. So very clearly they made that distinction, that no matter what, the Indian currency or a foreign currency will not be treated as a virtual digital asset. So I hope that answers your question. So they don't need to make any changes to that. Yeah, that was Rakesh's question. So great. I think that's more or less what we have. So if we summarize, the government has now amended the Reserve Bank of India Act, and now RBI can issue Rupee in the electronic form. What that means, whether that will happen on the blockchain, we don't know yet. On the other hand, we are seeing that the government has defined a new concept called virtual digital asset. A tax of 30% has been put on that. A TDS of 1% is also there, which would be part of this 30% that has come in. If you gift crypto, you would be liable to pay gift tax on that also. So that's kind of what the overview is. I will be now putting a detailed article out on this by tomorrow. I will just take one more question. Shwetang has asked, how do you think this would affect the trading of crypto? That's a very good question. And I think this would impact trading quite negatively, because I'll tell you what I fear is going to happen. So, as a trader, you're doing lots of transactions every day. So let's say you did transactions in Bitcoin and transactions in Ethereum. Now on the Bitcoin transactions, you made money. On the Ethereum transactions, you lost money, and the gain and loss was equal. So logically, you should pay zero tax, but that's not how it's going to happen. You made profit on Bitcoin, you pay 30% tax on it. You made a loss on Ethereum, that loss cannot be offset. So your Bitcoin profits will not be offset by your Ethereum losses. And that, I think, would be a very big problem for traders, and it would probably disincentivize traders to a huge level. So yeah, that's going to be tough for the traders. And then logically, that would impact the volume of transactions that would happen on the crypto exchanges. So this kind of may be bad news for them also. But like I said, things are still very new. Please give me another 24 hours. The budget document is a very long thing. The finance, it's about 284 pages. So I have read the whole thing, but I still want to give it another reading. And tomorrow I should be in a better position to give you more researched answers. So I think that's about it. There's one last question I can see. Arpit is mining from POW and validating for POS. Well, Arpit, that's a good point. Let's see. We are still a little away from that. And Ritesh says, can you spend a little more time on where stable coins are in this equation? That's a very good point. So I think stable coins would come under cryptocurrencies, and they would be covered under virtual digital assets. No special exemption would be available to them. The special exemption is only to the Indian currency and to foreign currency. So I hope that answers your question. If Padmanabhan says tax only when we convert to fiat, I guess so. Like I said, I'm not 100% sure. The tax may happen even when we convert Bitcoin to Ethereum. So I'm going to request, give me one more day. Let me again read this entire 284 pages of the finance bill. And by tomorrow, I should be able to answer this question with more conviction. Right? So thank you so much for this session.